right, everybody, welcome back to Bain Break It Down Forex. It's your boy Big Bain in this thing. And guys, today I'm gonna break it down. Fair value gaps. All right. Now, I get this question a lot. A lot of my members ask me this. Just in general, I feel like this is something that once you guys start to learn about what fair value gaps are, you have to start, having questions around when you actually spot them and, how to play them in conjunction to looking for a trade. All right. So pay attention, guys, because it's going to be a simple, quick, and easy one. But, definitely going to break down how you guys or what are the best time frames for you guys to trade fair value gaps. All right. So here we are over to my drawing board. All right. So, guys, what is FVG, right? Some of you know, some of you don't, but it's simply fair, if I can type, value gaps. All right, boom. Bang, what the hell is a fair value gap? All right, fair value gap. We have another word for it. Maybe you know this one, and it's called imbalance. Okay, well, maybe you heard it. You still don't know what it is. What the hell is imbalance? All right, so just for the record, these two are synonymous with each other, guys. Fair value gaps and imbalances mean the same thing. Again, the words are different, but they mean exactly the same thing. So what are you talking about, Bain? All right, check it out. So on the charts, guys, you'll get a candle, right, that opens and closes. Boom, bam. All right, there's your one candle. And then you get another candle, like right above here, right? Kaboom. There's your candle. And then you get one more candle, right? So we're talking kaboom, kaboom, boom. Give it a little wick at the bottom and the top, and there you have it. All right. So, guys, a fair value gap is anytime you have three consecutive candles that the first candle and the third candle, so I'll write one, all right, two, boom, and three. All right. The first, the second, and the third, you just have three candles, but the first and the third candle, they don't share price. What do you mean, right? So over on the right-hand side, you have price, let's say $1, $2, right? It doesn't really go like this, but you guys get the idea. All right. Candle one, right, was all over here at 3, right? Candle 3 was all over here at, 1, the price of 1. Neither one of these candles are in the space of 2 or the price of 2. Let's put it that way, right? Only that second candle. So the first candle and the third candle don't share price. Therefore, you have a gap, okay, between those candles. Why is that important? All right, guys, because this shows that there were way more bulls in the market, and that was not, there was an imbalance, meaning you didn't have bulls and bears that were in the market that were balancing out price. You had strictly bulls in the market that were creating an imbalance in the price. All right. So obviously, there's two things that the market likes to do, and that is to seek out liquidity. All right. And balance itself. All right. So a lot of times liquidity will sit behind your swings like this. So this is a upswing, right? A swing high, and all the money sits behind here. So if price is down here, right, eventually it wants to go and seek out that liquidity. We call it a stop hunt, right? Typically, if you sold from here, your stop losses will be behind here. The market makers know that, hey, free money, push it up, right, to take it down, right? It's always how the game goes, guys. And the moment you guys understand this, your trading is going to be a whole lot different. But regardless, those are some of the things that it looks to do. Take out liquidity on this spectrum. And then the other thing is to balance itself out, right? So when it creates these gaps where you have this imbalance, it wants to come back to fill that imbalance before pushing up to the upside if it's, imbalance to the upside, or, if it's reverse balance to the downside. I want to take you guys over to the chart really quick, right? So you guys can see here, here's some fair value gaps on pound dollar. All right, so you have this candle, they have a gap, and I mapped it out, right? There's the fair value gap. Again, here's another one here, right? So touching into what are the best time frames to trade these fair value gaps. Bain, okay, you pointed out that there's a fair value gap here, there's a fair value gap here, but which one should I use, right? Which one should I try to get into a trade off of? All right. So here are the answers to these questions, guys. Number one, all right, it depends. So on the time frame, if let's look at it this way. Is it harder to hold groceries in your hand for 1 minute or for an hour? All right, I'll give y'all a second to think about that. But we all know it's harder to hold it for an hour. All right, because the person who can hold those groceries for an hour, we're definitely going to say they're a lot stronger than the person who's holding the groceries for 1 minute. Right? You understand what I'm saying? The same concept applies to these fair value gaps when you're thinking of the best time frame to trade the fair value gaps. So the higher time frames are stronger versus the lower time frames are weaker. Okay, so we're on a 1 hour time frame, so a fair value gap on the 1 hour is going to be stronger than any fair value gap that you may happen to find on the 15 minute. Okay, so sometimes you want to mark, have a way of marking the chart. Marking your fair value gaps to let you know what time frame they're on, right? You understand what I'm saying? So again, here on the 1 hour, this would be stronger than any fair value gap on the lower time frame. All right, so that should just give you guys an idea of, if you know where your fair value, what time frame your fair value gaps came from, and prices nearing those gaps, those are the ones that you want to get into a play off of. Okay, now that's number one. So just understanding higher time frame fair value gaps are better, and the ones you want to use, right, to enter a play versus the lower time frames, because the lower time frames are weaker. They can get blown through very, very easily, right? But what if you are on, what if you have price at one of your higher time frame fair value gaps? Then, what do you do in that scenario, to where maybe you have multiple fair value gaps on the 1 hour time frame, like we kind of do here? We got two, but maybe we had a third one down here. Which one of these do you want to play off of? To be honest with you, the lowest one, right? The one that's furthest away. All right. And let me give you an example why. Is for this, the one that's recent right here. Yes, we can tap into this, but this is not at the best, like the lowest price, right? We always want to buy low and sell high. So again, maybe it'll bounce off of this and go up, but there's also a chance that it can eat this, balance this out, and then head right down to balance this one out because it sits right below it, right? So here, if you guys see the two positions that I'm looking to take this week on pound dollar, right? It's bullish for me. So on this play, I got a risk to reward of 1 to 8, and I'm making, I'm risking 7 pips to make 56 pips. On this play, I have a 1 to 5, a lower risk to reward ratio, but I'm risking 13 pips to make 73. So I'm making more money on this play because I'm getting in at a lower price. So again, guys, this is a age-old question. When I have multiple fair value gaps, which one should I try to play off of? The lowest one, okay? Now, there's a con to that, okay? The pro is that you're getting in from a very discounted price, right? If you're buying, and then if you're getting into the farthest one up, if you're selling, right, then you're getting it at a very high price, and that's what you want to do when you're selling. But the con is that it may not get down to that fair value gap that's all the way down or all the way up, right? It may not get to those. So in that situation, you just missed the trade. You see what I'm saying? And it comes with the territory, guys. You can't win them all. You understand what I'm saying? But if you set yourself up to take advantage of when price reaches one of the far away fair value gaps, you'll feel a lot better about that, because one, you got in at a discounted price. Two, that price is balanced out all the ones above it. So we definitely have a better probability of rising at that time. So guys, that's where you get away with your 5 pip stop losses and end up making 100 pips. We've done it, we've seen it, and it's real. Okay, I just need to let you guys know that. But those are the answers, all right, to the fair value gaps, right? If you are determining what's the best time frame, the best time frame are the higher time frames. So any higher time frame, anything above 1 hour is what you want to consider a higher time frame. Anything below the 1 hour is a lower time frame. So you got a fair value gap on the daily. You see another one on the 4 hour. You see another one on the 2 hour. Guys, if price is near the one that you found on the daily, you better play it. Okay. If it's near the one on your 4 hour, you can play that one too. Right? If it's on your 2 hour, you can play that one as well. Right? What you need to understand, guys, is that if it's just that one fair value gap, it's perfect. You just play off of that and you go. But if you have multiple, right? Again, it's better to get the lowest one, right, in terms of a buy. And it's better to try to set yourself up with a pending order on the higher one if we're talking sells. Okay? And that's simply it. Don't overcomplicate it, guys, right? You will absolutely get to the money. Go had a perfect example of that. Look, here we go, right? And two fair value gaps on the 15-minute time frame. They're so close to each other. I'm absolutely going to have a buy limit order on the second one, just like this. Kaboom, right? Set my stop loss. Set my take profit. Okay. Way too much, but boom. Right below that swing low. And then here, I'll just aim for 1 to 2. That looks about right. Let's check it. Yeah, 1 to 3. All right. And so now reset my chart. And there we go, guys. So if you guys understand market structure, you know that we're currently in a run right now. So we have the run. What we're going to get next? A pullback. It's going to activate my buy order. I got my stop below the swing just in case it wants to do a little funkiness, right? Because this is an order block that sits here. And you guys can basically look at this as support. Okay. So whoop, there it is. All right. But my stop loss is good, right? So go ahead and do your little dance, balance out, take liquidity, and then go ahead and shoot up and hit my take profit. It's easy money, ladies and gentlemen. All right. But let me know, what questions do you guys have around fair value gaps? Have you, played it from the low? Have you missed out because you played it from the low? What's the deal? Just anything that you guys want to know about fair value gaps or imbalance is what we call this, right? It's just an area where basically you have nothing but bulls, showing up in the market, not touching the same price between 3 candles. The same is true when we're talking, going to the downside. So 1, 2, 3, there's a gap right here. And I'll just illustrate it right now. Kaboom, right? There's a fair value gap to the downside. All right. It's just when we got to this fair value gap, well, guess what? It did not reject it and start to fall. It just broke right through it. So that's a whole nother thing that, we didn't really talk about. But just to keep it short, you're not always going to win every trade that you take off a fair value gap, right? That's just how the markets are. But if you're looking to understand what are the best time frames, there you have it. The higher time frames are always going to be the better time frames to play off of these fair value gaps. You can still do it on the lower, but understand they are weaker and more than likely to get blasted through, which is exactly what happened here on the 15-minute time frame. Just went right through it. So again, these may get push all the way through as well. You don't know, but you're just preparing yourself, right, for the probability of it rejecting one of these fair value gaps, balancing out, and then continuing your favor. All right. So, hopefully this help demystify a few things for you guys and, just help you understand it, right? You know what I mean? This fair value gap stuff, this imbalance is very, very simple, guys. If you want more breakdowns of how this stuff goes, go to my Discord. You can get to it by going to forexwithbain.com. That's www.forexwithbain.com. Click on the link for my Discord and just come on in, right? The water's fine and we get to it, guys. This week, we killed it, okay? We killed buys on gold, over 150 pips on Tuesday, 250 pips on Wednesday. We sold US 30. We made 590 points on that. Then we bought US 30 NAS and SPY all at the end of the week, right? On Friday for a good amount of points on each one, guys. And we got it off a double bottom. It was a beautiful last week. I'm not going to lie to you. Okay. And this week is also looking like it's about to set up to be another perfect week. But ladies and gentlemen, get with me. Okay. I know it's you. I see you. I know that you are wanting to learn this stuff because you're trying to get out of whatever your situation is, and you've been hearing about this, and you think it could be the thing to get you. And I'm telling you, it can. All right. Absolutely, positively, 1000%. All right. So, guys, hit the like, comment, and subscribe button for your boy. I appreciate that love. But meantime, in between time, y'all know what it is. It's your boy. Peace.